Hello everybody, today I will present you the company named Ebusco and discuss with you why you should invest in this company. First, I'll be giving some information about the company. Next, I'll be discussing the financial figures with you that consist of the current ratio, quick ratio, cash ratio and the share price. To end, I'll be giving a summary that will give a brighter view on why you should or should not invest in the company. Before starting, I would like to give some information about the company itself. Ebusco is a manufacturer and distributor of zero-emission buses in the Netherlands and will be a big supplier in the future to go for global zero emissions. Moreover, the company has recently signed itself as a listed company on the Euronext Amsterdam, causing a big rise in the company's capital. We'll be looking at different aspects of the company's financial situation with the sales to start. It is very important to know that you will only see the figures for the past recent years, as 2021 is still in progress. Now looking at the sales figures, we can see that the company's sales have grown between each year, but the increase has fallen by 5% in between 2019 and 2020. The reason for this drop is due to the high number of sales in 2020 and the denominator. Secondly, the net income also shows an increase that is due to the reduction of the use of electricity. The reduction itself is a result of the production of lower weight buses. Looking back at the figures of the net income, we can see an increase of 101% between 2018 and 2019, starting off with a negative net income in 2018. Between 2019 and 2020, we see that the increase has fallen but by 20%. Thirdly, we could also look at the liquidity of the company to see if the company is able to fund its short-term obligations. The first liquidity factor is the current ratio, and for this company that is 1.52. The figure is above 1 and means that the company is able to use its current assets to satisfy its short-term debts. The second factor, namely quick ratio, is 1.46, which means that the company is able to pay its short-term debts with quick assets as it is above 1. The last factor is the cash ratio, which is 0.43, and means that the company doesn't have enough liquid assets to cover its short-term debts. Last, the share price has shown a massive increase from 23 euros to 30 euros as a result of the company's new investor, namely ING. This attracts much attention from various people to invest in the company, which would result in an increase. At the moment, the share value has dropped to 28.10 euros, but I expect a high increase as a response to the agreement at the COP26. In conclusion, the short-term ratios represent a very good vision of the company, as it is only able to pay short-term debts with current and quick assets. In the long run, the company has a bright and lucrative future, as electric vehicles will be obliged in the near future. I therefore recommend you to invest in this company. Now for questions, please feel free to ask them via Canvas.